Welcome back to Micah Miliner, the Financial Freedom, where we talk about all things financial independence and wealth building. Today's topic is a critical one: procrastination when it comes to investing. It's something that holds too many people back from achieving financial success. But every day you put off investing, you're actually losing money. In this video, we'll break down why it's essential to stop delaying and start investing now. 1. The cost of waiting. Let's start with the most important point: the cost of waiting. Every day you don't invest, you're missing out on compound growth. Compounding is when the money you invest earns interest, and that interest starts earning more interest. It's like a snowball rolling down a hill over time. It gets bigger and bigger. For example, let's say you invest $100 a month, starting at age 25. By the time you're 65, assuming a 7% annual return, you could have over $240,000. But if you wait until you're 35 to start, that drops to just about $118,000. That's over $100,000 in lost potential earnings just because you waited 10 years. Imagine what those numbers would look like if you invested even more, too. Time is your greatest asset. A lot of people think they need to have a lot of money to start investing, but that's not true. Time is actually your greatest asset. The earlier you start, the more time your money has to grow. And you don't need a huge amount of money to begin. You can start small, even with just $50 or $100 a month. Investing consistently over time is how most people build wealth. It's not about timing the market or finding the next hot stock. It's about time in the market. The longer your money stays invested, the more it grows. 3. Inflation is eating away at your money. Here's another reason why waiting to invest is costing you money: inflation. Inflation slowly reduces the purchasing power of your money. If you're not investing, your money is losing value just sitting in a bank account. For example, if inflation averages 3% a year, the $1,000 you have today will only be worth about $700 in 10 years. But if you invest at $1,000 and it grows at 7% annually, it will grow to about $1,967 in that same time period. Which would you rather have? 4. Breaking the fear of the unknown. Many people don't invest because they're afraid of losing money. But here's the reality: doing nothing is a guaranteed way to lose money. If you leave your money in cash, you're losing purchasing power every year because of inflation. Instead of focusing on the risk of short-term losses, focus on the long-term potential. Historically, the stock market has returned about 7 to 8% per year, even with downturns. Over the long run, the market grows, and your investments grow with it. If you're unsure where to start, look into low-cost index funds or target date funds, which are great for beginners. These options allow you to diversify your investments without having to pick individual stocks. 5. Automate your investment. One of the easiest ways to stop procrastinating and start investing is to automate the process. Set up an automatic transfer from your checking account to your investment account each month. This way, you won't have to think about it, it just happens. You're investing consistently without the stress of manually doing it. Automation also helps you stay disciplined and ensures that you're sticking to your investment plan, even when life gets busy or the market gets volatile. 6. The future you will thank you. Picture yourself 10, 20, or 30 years from now. Do you want to look back and regret not starting sooner? Or would you rather see how your money has grown and how you've set yourself up for financial success? Your future self is depending on the choices you make today. By starting to invest now, you're building the foundation for financial independence and possibly even early retirement. The best part? It's never too late to start, but the earlier you do, the better. 7. The power of consistency over perfection. Many people procrastinate because they feel like they need to know everything about investing before they start. But here's the truth: consistency beats perfection every time. You don't have to be a financial expert to start investing. You just need to get started and stay consistent. Think of it like going to the gym. You won't see results after just one workout, but if you keep showing up consistently over time, you'll see the progress. The same applies to investing. Don't worry about getting every move perfect, just focus on building a habit of regularly investing and letting time work its magic. 8. Opportunity cost. Missing out on gains. Every day that you're not invested, you're missing out on potential gains. This is called opportunity cost, the cost of choosing not to invest. Sure, it's easy to think about waiting for a better time to invest, but the truth is no one can predict the perfect time to enter the market. Trying to time the market is a losing game for most people. Instead of waiting for the perfect moment, adopt a strategy of dollar cost averaging. This means investing a fixed amount of money at regular intervals, regardless of what the market is doing. This strategy helps smooth out the highs and lows of the market and takes the pressure off trying to make perfect timing decisions. 9. Get rid of the excuse wall. Make excuses. I don't have enough money to start. I'm waiting for the market to calm down. or I don't know enough about investing. But the reality is, there will never be a perfect time to start investing. The only way to make progress is to take action now. Start with what you have. Even if it's just $10 or $20 a month, it's better to start small than not at all. You can always increase your contributions as you get more comfortable and as your income grows. The key is to take that first step. 10. The bottom line, time in the market beats timing the market. The final takeaway is this: time in the market beats timing the market. The longer your money is invested, the more time it has to grow. While it's natural to feel hesitation, the earlier you start, the greater the rewards you'll see in the future. Procrastinating on investing is costing you more than you realize. Take control of your financial future today by making the decision to invest, whether it's a little or a lot. Every dollar invested is a step toward financial freedom. That's it for today's video on Micah Miliner, the financial freedom. If you've been putting off investing, hopefully this has inspired you to take that first step. Remember, every day you don't invest, you're losing money, and your future self will thank you for starting now. Make sure to hit the subscribe button and turn on notifications so you never miss a video. Share this with someone you know who could benefit from it. And let's help each other get on the path to financial freedom.